This episode of Profiles in Risk is sponsored by IA-Path. IA-Path, unlocking your adjusting superpowers. Go to iapath.com.
This is Profiles in Risk. Hosted by Nick Lamparelli. Every week, we interview those who risk life, limb, fortunes, career, and reputation, and those who work behind the scenes who look to protect and enlighten us about risk. You can find the show notes and other insurance-related content at insnerds.com. That's insnerds.com. Now, on to the show.
I'm at the Insurtech Rising conference in Boston, and I am with
Anita Aspel from IDA Ireland.
And what is IDA Ireland? And let's go into the benefits of Ireland for insurance companies.
Okay, so IDA Ireland, first of all, is a government agency, and we're tasked with encouraging foreign direct investment from multinational companies to come to Ireland. We've been very successful to date, specifically around technology companies and with the insurance industry. So we figured that the two coming together, we're seeing a lot of success in the growth in that sector. One of the reasons, I suppose, people choose to come to Ireland or companies come to Ireland is it's a mix between kind of, the base of companies that are already here, which encourage a very strong talent pool in both sectors. Our Irish government has been in this space for 50, 60 years. We've built an entire ecosystem around working to encourage multinational companies to come to Ireland, and we've been very successful in doing that.
Yeah.
So,
is there anything specific about the insurance space that makes Ireland also attractive?
Well, it's really around talent. We have a very, very strong education system. Ireland is a launchpad into Europe, so we're not talking about companies looking to service the Irish marketplace. These companies are coming over to Ireland. They're accessing the European market of 450 million consumers and customers, and they're able to leverage the Irish education system. We have a lot of talent that's actually comes directly from Europe into Ireland, as well as our own Irish domestic base. And we have, in terms of the kind of very attractive tax system, we've got a very attractive research and development ecosystem here as well. We've got a lot of tax credits that companies can leverage. So yeah, all in all, I think it's a very interesting package for companies to look at. So,
any chance of Ireland leaving the European Union?
Not a chance at all. In fact, Ireland, in terms of they were doing an EU study, and Ireland came out as the very, very top in terms of sentiment toward EU. The Irish people are very happy to be part of the EU. And we've seen the benefit of a small open economy like Ireland has really just had very, very positive benefits from being part of the EU, and we don't plan to change that.
And how long's the flight from Dublin to Boston?
6 hours.
Okay, so
yeah.
Easier than the rest of Europe.
A lot of easier. We've got the English speaking. We've got a similar legal system to the US. We've got very close cultural connections. It's a win-win, and we find that a lot of US companies have already copped onto that. So we're open for business.
So the big question for me, does it snow in Dublin?
Do you know, it snowed for the first time in a few years in Dublin this year. We got the best snow we've had since 1982, and it was amazing. But unfortunately, we don't get it on a regular basis. We've got a very temperate, mild climate.
Okay.
So
how are you finding Boston?
I love Boston. Boston is an amazing city, and it's so nice to get a blast of sunshine. And it's very friendly. We're loving it.
A lot of Irish here.
A lot of Irish, very, very welcoming. They love our accents over here. So.
Yes, we do. Thank you so much.
Thanks a million.
I'm back at Insurtech Rising in Boston 2018. And what's your name?
Brent Williams.
And what do you do? Who do you represent?
So I'm the founder and CEO of Benakiva. We're a life insurance platform to process claims, deal with unclaimed property law and compliance, and certify, update, notify beneficiaries. We took that 258-year-old claims process and digitized it.
So I'm trying to think of the claims process in life insurance. in my mind, it seems pretty straightforward. Something really bad happens, and you just got to show them a piece of paper. Talk about a little bit about like what some of the choke points are that you try to solve.
Well, it's interesting. I was an advisor at a large life insurance company for 12 years, one of their top producers, and the claims process is always just a tough process to go through, especially if you're doing that by yourself. It's a tough process to go through even if you do it with an advisor, but it's an extremely tough process if you're doing it by yourself. So one of the things that I decided to do was solve that problem and make it a much more easier, streamlined process. So for example, let's say you file a claim at Life Insurance Company A today. You call in and say, I have to file a claim. They're going to direct you to their website where you download a non-fillable PDF, right? And you handwrite in the...
I know where you're going with this.
Right? And then you either mail it or scan and email it in. 7 to 10 days later, you get a 10 to 12 page death packet in the mail that it looks like you need an attorney to fill out, right? So what we did was we took that entire process and digitized it and send the beneficiary all pre-filled forms. So they don't have to worry about trying to fill this out or trying to fill that out correctly. It's a very easy process.
So I always thought you just needed to get like a death notice.
No.
So you're just like laughing at me.
Yeah.
It's much more complicated than that.
It is. Yeah.
So why would it be? Why so many steps? Why so much paperwork when it's pretty cut and dry? It's kind of binary, right? It either happened or it didn't happen. So why all the paperwork?
Well, I mean, life insurance companies want to pay claims, the good ones anyway. They want to pay claims. The problem is their claims process isn't a revenue generation process. So that process, it's been that way for 258 years, and it stayed that way because it works. I mean, it's an old process. We know we need to fix it, but it's a back burner item. We'll get to it when we get to it. Yep. And what we're saying is you could take that claims process and create a revenue driver out of that. So that's where our Benny Certify comes in. We take that claims process, and if your company has advisors or licensed representatives, we loop them into the claims process now. So now that advisor now has a chance to replace a deceased client with a new client, retain any assets instead of them going to the bank, right? And potentially sell products and services to the beneficiary that they probably need.
So advising them what to do with the proceeds.
Correct. Yep.
Okay. Wow, I didn't know it was that complicated.
Well, we haven't even talked about the compliance piece.
Well, let's talk about the compliance piece. So, again, I'm thoroughly confused because it would seem like it's pretty straightforward. It's a binary process. Where's the choke point here?
So there are what they call unclaimed property and escheatment laws now. Each individual state has their own version of that law or interpretation of that law. So if a person doesn't file a claim on a life insurance policy, in the old days that policy just sat on the books. Okay? Well, new unclaimed property laws have made it to where if the insurance company doesn't file or someone doesn't file a claim on that, now they have to escheat those funds over to the individual states, right? So from an insurance company perspective, it used to be we didn't necessarily, I mean, it's not that we don't care that somebody doesn't file a claim, but it isn't on our radar. If someone files a claim, we'll pay the claim. That's what we're contracted to do, right? But if they don't, well, then it just sat on our books. Well, then unclaimed property laws came in and said, no, you can't let this sit on your books. If someone doesn't file a claim and you don't process a claim on this policy within a certain amount of time frame, you have to cheat that money over to the states now, right? So now there's a whole unclaimed property law and escheatment process that every life insurance company has to deal with. Oh, and by the way, there's 52 different versions of it.
Yeah, shocker.
So we built that into our platform to where they can comply with unclaimed property and escheatment laws through one platform. So now they can process claims, they can create their claim system and make it be a revenue generation portion of the business as opposed to just an expense. We can reduce the expenses on the claims by 25 to 30% pretty easily. And we also help them comply with unclaimed property laws. We notify and update beneficiaries. So life insurance companies, this is amazing. You would not believe how many life insurance companies pay ex-spouses, right? Because the contract says we pay this beneficiary. But what happened is that person got divorced. The policyholder never updated the beneficiary. So when a claim comes in, guess who gets the money? The ex-spouse of 15 years, right? Now, from a user experience perspective, who do you think the new spouse is mad at?
The life insurance company.
Exactly. Even though it's not the life insurance company's problem. It wasn't the life insurance company's fault that the beneficiary isn't updated, right? So we take that step, and there's over $14 billion of unclaimed life insurance policy right now in the United States, right? That's policies that are sitting out there waiting to be claimed. Why did those policies not get claimed?
I would guess someone died and they didn't have family, so they didn't even know the life insurance policy existed.
Here's a personal story. So one of our co-founders, Jason, he was literally at his father's funeral shaking hands, and a gentleman walks up to him and says, "Hey Jason, by the way, sorry for your loss, but if you need help with the paperwork, let me know." And Jason says, "What paperwork?" He said, "Well, your father had a life insurance policy through the state of Alabama. Had that 10-second conversation not occurred, that policy would have never been claimed, ever." So that's why we have Benny Notify.
Well, this was karma, because now I remembered that my niece told me that my name popped up on one of those state lists.
Yeah.
I have a couple of small bank accounts for, $10 or $15.
Mm-hmm.
So it was karma that we met. Thank you so much.
Thank you.
Okay. Back at Insurtech Rising in Boston, and what is your name?
I'm Shruti Rao.
And who are you with?
I'm the CEO and co-founder of Adapt Ready. It's an early stage insurtech startup.
And what problem does Adapt Ready?
Yeah.
Adapt Ready, what problem do you solve?
So if you look at what's happening in the insurtech space, there's been, especially 2017, has been a year of major disasters, particularly in America. But what's interesting when you look at that is the insured losses, although was 270 billion, the uninsured losses were like more than 600 billion, meaning the gap between insured and uninsured is 340 billion. But if you look at what's happening from the insurer side, they're fighting for the same clients and the same margins. And this 340 billion in gap is a missed opportunity for anyone in the business of managing risks.
It's an underserved market.
Exactly.
No competition.
Exactly.
Talking right up my alley. It's a huge focus of mine as well. So for Adapt Ready, is there anything in particular in that protection gap that you're specifically focusing on?
Yeah, so the reason insurers are not able to tap into this is lack of high quality and relevant data. And that's what we bring to the table. So we have built a risk intelligence platform that can harness and optimize external data like it has never done before. So we are focused mainly on the commercial lines and addressing some of the large corporate business insurance angle, but we also have products for SME. So we bridge the gap between the gap in terms of the lack of data from the customer angle. And what we bring to the table is like this jigsaw puzzle fit that gives insurer a much more complete picture for what they have and what we can bring. And then we identify which are the risk exposures and also give a risk score.
So it's supplying data.
Yeah.
So curating it, supplying it to the insurance industry, but then also assisting them, guiding them in terms of in terms of risk appetite or what they may or may not want to underwrite.
Absolutely, yeah. So it has many different. It brings value proposition to many different aspects. One of the key, of course, underwriting, helping with pricing, premiums, right? But one of the key ways it's been used today by insurers is it's been used as a strategic sales tool. So far, insurers have been more reactive, that they get the business, they look at and they analyze the risk. So this platform can help them be proactive and win new business.
Geography?
We are a global product.
Okay. So if someone wanted to perhaps tackle Thai flood, you would know how to get that data?
You have to be a bit more specific in terms of Thai flood. What we can do is imagine a large corporate, right? We can gather quite a lot of, let's say an insurer wants to insure, say, like a pharma company. So we are able to gather quite a lot of information about the pharma company and look at how the supply chain is and so on, and how the risks are spread out. We give them a lot more information. So when insurers couple their information or their data with us, they can see which parts are insured and which are the remaining parts. So they can use this and sell this, go to the pharma company and say, okay, this is how your risk exposure looks like. These are the areas that you can take a cover for. So these are the insurance products we have, and either renew or upsell, and so on.
How old is Adapt Ready?
We are early stage, 2+ years, but we have been focused on the insurance since early 2017, and we have had some really good early successes. That is, we won 2 awards. One was the Risk Modeling Technology of the Year award by Insurance Times against RMS and AIR Worldwide, as well as Excellence in Technology Service Provider Award, and one recent last month for the Best Customer Service Product for Business.
Fantastic. Fantastic. You know that a 2-year-old Insurtech company is now considered seasoned?
Oh, really?
Yes.
Okay, now.
It's not early stage anymore.
Okay, we are a seasoned Insurtech company.
There you go. You've graduated. Thank you so much.
Thank you.
And we'll get right back to this podcast right after a short message from our sponsor. I'm here with Chris Stanley, founder of IAPath. So Chris, what is IAPath and why did you start it?
Well, Nick, I started IAPath because a friend of mine wanted to get into the industry and couldn't find anything online about how to become an independent auto damage appraiser. And I just thought that was crazy and kind of unacceptable. So I decided I wanted to make it easier to be and become an independent appraiser and adjuster by providing people with information, inspiration, and eventually certification. From the beginning, it was important to me that I'd be a real human being that people could connect to. Yet, I dreamed it would become an organization that was big enough to make a difference. So what is IAPath? We're here to give people a clear-cut path to becoming an IA. Thus the name IAPath.
IAPath, unlocking your adjusting superpowers. Go to iapath.com.
Back at the, I get all of these conferences. Yeah, Insurtech Rising. There's too many Insurtech conferences. And what is your name?
Harish.
And what is your name?
Graham.
And you are with DataCubes. Could you tell me what is DataCubes?
So we are a roughly 2.5-year-old startup, and
So seasoned.
veterans.
Not a startup anymore.
Yeah, not a startup anymore, I guess. So we focus exclusively on underwriting commercial P&C risk. We have a very simple vision, which is essentially we want to help insurance company underwrite commercial risk by just knowing the name and address of the risk itself, right? So none of the paperwork and none of the data crunching that they do today. You should go from name and address to quote, and everything else behind the scenes is what we enable.
Okay, spill the guts. How do you do that?
So a lot of hard work. So essentially, somewhere hidden in our basement. No, so our hypothesis, right? In this day and age, there is enough information about businesses that's available in the public domain. Either things you can license and buy, or things you can acquire from open data sources, right? Where you can actually answer the underwriting questions by building models off of that external data set, right? So a simple question like what is the nature of a business a company does? As an underwriter, you could visit datacubes.com and understand we're a software company that uses SaaS model to sell to insurance companies.
I'm gonna have to clean that up. My wife is calling. Clean that up.
Keep going?
Yes, please.
Okay. So if you were to scrape the website, right, like crawl our website, you can get the text data that an underwriter reads to make that determination that we are a software company. We can also scrape the website and teach the machine what to look for to decide we are a software company. So that's the essential logic, is accumulate enough information about businesses in the US and then build models on top of it so that you can answer underwriting questions.
How skeptical are P&C companies when they hear a pitch that we need minimal amounts of information, we can supply you back a ton?
I don't know that anybody's skeptical right now. I think the hardest thing that we have to overcome is somebody trying to put us in a box of just a data provider, or as they're conceptually trying to understand what the solution does, only keying on the one of maybe 3 or 4 things that the product can do. I think insurers now are looking for ways to automate and have underwriters spend less time doing it themselves. So I don't see a whole lot of, I don't really believe you can do it.
How has it been when you work with your carriers to actually get the underwriters to go through, or the actuaries, or whoever is responsible for embedding these, to actually use it? It's been an experience of mine that, carriers are very willing, they're eager, but then the product comes in and it kind of, I wouldn't say it sits on a shelf, but they're not exactly sure how to implement that. How much massaging do you have to do to them to get them comfortable with it, but also to kind of nudge them to get them to use it?
Yeah, so adoption is generally going to be hard, right, for an industry that has done the business the same way for a while. But as Graham said, right, there is a burning platform to improve the process today, right? As underwriters change in terms of both demographic and their interest, carriers themselves are looking for a newer and better way to attract talent. Rather than the old ways of exchanging forms with brokers and doing it the old-fashioned way. They're trying to figure out how can you put a platform that excites a newer crop of underwriters, right? So that's one burning platform they have. The second one is a lot of the segments of the business, like small business, there is enough of a push to go towards where there's straight-through processing, for example, right? Where there's minimal input and minimal back office processing to get a quote out the window, right? So in those 2 instances, I think there's enough awareness that we don't have to do a lot of pushing, right? And at the end of the day, I believe adoption still happens because the product works. So we spend most of our energy in trying to make sure that the product works for the underwriter, right? And then that's what's helped us quite a bit. And we are less like spending time on selling AI or NLP or ML or any of those fancy words. We spend most of our time educating the companies about what it is that we change about the underwriting flow itself.
Are there any particular lines that you find your product gets more traction with versus others?
I think so. It's more of our design than the market. The demand is across lines of business, but we have gone live with comp and general liability and property because those are where the models are. So I haven't seen a bias in the market though. Like there is a lot of interest for financial lines, for example. Carriers are always hitting us saying, can you do a D&O, E&O, or EPL, right? Like I think the demand's there. I think we have to build those models and be able to monetize off.
You take a lot of effort, not just in building your own models, in having teams that can give the it's already been vetted in a way, and basically you have to tie either claims data or something that's very specific to the company to actually make it work.
Yeah, so we have an underwriter, somebody who knows underwriting on staff, who's looking at data and then building the training data sets that the machine should go off, right? They will actually read a building permit and say, does that mean the contractor did plumbing or did they do roofing work? And that's how we build the training data set. So when the carrier is receiving it, we have already built something out of the box that they can use, and it's not a raw data dump, right? Like so that's not possible with some of the lines we haven't worked on, and that's how we think about it.
So thank you.
No worries.
Back at Insurtech Rising in Boston. What's your name?
Hi, I'm Jim Bowen with Energetic Insurance.
What is Energetic Insurance? Is that like insurance for people that run too much?
That would be cool. We have to look into that. But, we came up with a name because we are working in the energy industry, but we're also energetic people. And we think that and we're very energized by the insurance industry and very excited to be building this new product for the solar energy industry.
Yeah, so let's talk a little bit more about that. What's the risk first that needs to be covered?
Yes, we're addressing financial risk in commercial solar projects related to the buyers of electricity, of solar electricity. So if you are a business, you want solar on your roof, you usually do that through long-term financing arrangements, loans or leases. But because these are 20-year contracts, the banks and the lenders on these deals, they require a Moody's or Standard & Poor's credit rating. Over 90% of the businesses in the U.S. and more around the world don't have that kind of credit rating. We essentially lend the rating of a large insurance company to the deal so that the bank can look at that rating and the off-taker can get the solar, the buyer, at affordable prices.
My guess is that business is probably gangbusters.
Businesses are probably gangbusters. Yeah, they're loving this. The whole solar industry, this is one of the biggest problems, and so we've been getting great customer feedback, strong interest from the banks on solving this problem. They can't do it internally due to regulations, so they would love to expand their market as well. So everybody's been very receptive about this product.
What triggers a claim?
A claim is triggered by an off-taker default. So in solar parlance, the off-taker is the buyer of electricity. So if they stop paying for on this long-term contract, that triggers a claim. We will cover a portion of the electricity contract payments that were scheduled, up to a maximum limit, which depends on each deal.
Okay, so how difficult would it be to then transition over to covering solar panels and things of that nature?
Like property insurance our goal is to come up with new products and innovate on existing products. We're not looking to just take an admitted policy form and just compete on price or marketing. We want to be a lean team that's really focused on innovation. So to the extent that we see that we could change or innovate in a property policy or a casualty policy, we would do that. We do have a backlog of several new other policies that address specific risks in the solar or other energy sectors, and we will be launching those over the next year or two as well.
Yeah, so I was going to ask, energetic energy, so that means you're going beyond solar. It's probably got the same problem in other areas as well.
Yeah, so beyond solar, there's batteries. Energy storage is becoming a big thing. We've all heard of the Tesla Powerwall. Pretty soon they're going to be, those and other batteries are going to be everywhere.
How much do those go for?
I think they're like $2,500, I think. But the battery costs, as with solar panels, as with semiconductors, as with lots of all new technologies, are coming down very quickly in price. And over the next couple of years, you should see batteries becoming more ubiquitous. There's other technologies that we're looking at as well, fuel cells, wind. We think this product, the problem solution fit, the product market fit, works in other industries as well.
So where are you based out of, and how long has Energetic been going?
We've been at it for about a year and a half, and we're based out of Boston.
And you're going to be on the podcast at some point in the near future.
I'm very excited about it. We're going to be, we're buckled down, launching our first policies, getting that ironed out, and I'm really excited to tell you all about exactly how we've launched, how it's working, and even what our future plans are as well.
And I'm the first person on the list.
You're the first person on the list by sure, yes.
Good.
Exclusive insurance nerds.
That's the right answer. Thank you so much.
Thank you.
I'm with the man, Abel Travis, my nearest, dearest competitor in the Insurtech podcast world. Abel, hello.
Hey, how are you, Nick? Good to be with you.
So we're in Insurtech Rising in Boston, and what'd you think of the conference so far?
I think the conference is going pretty well so far. You know, there's a lot of individuals from just across the spectrum that's talking about some new concepts and new things in regards to innovation in this industry and transformation of this industry. So, you know, I think day one ended really well, and you couldn't have asked for, you know, a better day with better topics. And of course, with me being out there as well, you couldn't have asked for a better ending to the day.
Well, speaking of innovation, I'm not sure how many of my listeners know. Well, they most of them will know that I've interviewed you, and most of them probably know that you do a podcast. But you have news. It's not like you're breaking it here, but you have a new role.
I do, and thanks for asking me that. So I am now the head of innovation at AF Group. So what I'm going to be doing at AF Group, or I've already started there, is I'm looking for new opportunities to innovate and transform the organization. So really trying to hone in on what the three areas of innovation are that we're going to be focusing on. So first and foremost, it's product innovation, business model innovation, and then figuring out also what the growth strategies are going to be through leveraging innovation and creating a transformation strategy around that. So it's really exciting. You know, I'm going to be relocating out to the Midwest, so it's really different from being here on the East Coast. But you know, just with the value that AF Group is hoping to provide to the customers, it just made sense to take that approach. So yeah, it's going to be cool.
Yeah. So are there any particular lines of business? I know we talked about this earlier, but anything you can inform the listeners on innovation, but for what? For what types of products do they currently do, and potentially what might they do in the future?
I think that's a great question. So what I tell people is that roughly about 85+ % of the underwritten premium that they bring in is workers' compensation. Now that's the current space that we're in today. What I tell people though is that the future of AF Group is going to be looking at a broader strategy around what we can do from a multi-line perspective. So I wouldn't say that we're going to look at things like the BOP because it's high commoditization and there's not a lot of value as we start to look at the potential of driving into that line, but we can provide the same level of customer value as we start to look at the more highly specialized, low commoditized types of lines of business. So we while workers' compensation is our core today, we are going to be looking to diversify at some point beyond workers' comp to continue to provide value to the customers. We just launched a commercial lines auto product in regards to the trucking business, which is a segment that's really challenging, and those are the types of things that we're going to continue to try to innovate and provide value around.
You just brought up two lines of business which are probably the most difficult to be profitable: workers' comp, auto. So you don't see a lot of tech innovation in there, although I've been reading a lot more about wearables in workers' comp. So you have your work cut out for you.
Absolutely, and I agree with you. Technology innovation and workers' compensation. So it's a highly regulated line of business, right? So it creates a challenge. So while there's the work cut out, I absolutely believe that there's opportunities to innovate that segment, especially around commercial auto as well. So I'm looking forward to being able to drive that innovation strategy for the organization. I think it's going to be fun.
Okay. Well, best of luck in Michigan. You're always welcome on the podcast. Let's keep up to date. Let's know how you're doing.
Absolutely. Thanks, Nick. I appreciate it. And yeah, you've been doing an excellent job with your podcast, and I just want to say thank you for providing this platform. It's been great.
I'm with my really good friend. I forget what episode I interviewed on. It was like,
number?
Yeah.
I'm not sure.
Yeah, I think it's in the 30s. Yeah. Well,
31's my lucky number, so I'm hoping
okay, so it's 31, episode 31. Brett Poliquin, catastrophe modeling extraordinaire. Hello.
Hello. How are you?
We're at the Insurtech Rising in Boston. So, busy day.
Very busy.
You saw a lot.
Yes.
Any one or two things stand out?
Yes, actually. Am I allowed to name companies? Okay. Rosie AI was of particular interest to me. Their technology in terms of natural language processing and being able to just simply ask simple structured questions that you would ask a friend and getting legitimate responses from their clients or the people they represent, I see direct impact to the market I serve, and that's a very, very much of interest to me. And being able to, for those who are listening and don't know exactly what I support, I support the catastrophe bond market, and with any sort of structured finance product, there's a lot of documentation that supports that. To be able to have a bot filter through all that documentation, make sense of it, and being able to talk to the bot.
Well, there are a lot of common questions, right, that probably the bot can just handle.
Oh yeah, how many bonds do I invest in that? How many bonds do I invest in that cover named storms or hurricanes that are actually based on the determination of the National Hurricane Center versus PCS or another reporting agency? questions like that.
Yeah, no, that's cool. That's cool. Any other companies?
Let's think.
Or any other panels or presentations that you saw that you found interesting?
I
heard the Underwriters Toolkit was one of the better ones.
Oh yeah, of course. Yeah. Who moderated that? I can't remember.
Oh yeah, that was me.
Oh yeah, of course. Yeah.
Rave review.
Yeah. I think it was the only one I saw that had standing ovation actually.
Yes, it did. Standing ovation.
It was embarrassing, but I don't think anyone really judged me negatively for it. There was a couple panels back to back that I liked that were they're about the word innovation, which I always kind of cringe a little bit when I hear it, honestly, because it feels very buzzwordy. They were treating it very tangibly. The back-to-back panels were like, how do you innovate, and then where are you doing it? And they were just treating it very much like business as usual. Like, how do you actually convince people internally in your company to let you do this thing that could fail? And that's the right way to ask the question. Like, how do you actually motivate people to try something new? How do you get people in a company to experiment where your company isn't an experimental company to begin with? How do you convince the people that make decisions to let you do that and not fire you? Yeah. So that was extremely interesting to me. It's something I want to bring back to where I work.
Yeah, that's when I talked to some of the companies that are doing innovation, the amount of effort that it took to get the thing up and running, how many checkoffs. The gentleman that we were talking to over there, Stacy? Yeah, at Insurtech Hartford. When he was on, and I liked the conversation that you guys were having when they asked him, if someone wanted to innovate, how do you do it? And he's just like, you just do it. Just someone make a decision, just start doing it. Exactly. And so then the question is okay, how do we create the sandbox so that they can do it without being squashed by the rest of the company? So yeah, innovation, the word innovation makes me cringe as well. Lunch was good.
Lunch was good.
Yeah.
It was good.
I got a little bit of everything.
Yeah, it was a barbecue type inspired dish. I believe it was brisket, some pulled pork. I tried to avoid the heavier stuff so I could stay awake for the afternoon panels. This is one that I believe you led, that I needed to stay awake.
Yeah. When you go to conferences, I get overwhelmed. Especially when there are panels that are overlapping. So when you go to a conference, how do you manage how you're going to attack it?
That's an excellent question, because I actually take it pretty seriously.
I
do, yeah. So I download the agenda, I figure out who's speaking, I run it through my boss to see if he agrees with my approach. So basically, you get some value from the conference presentations, right? But a lot of the value is really coming from the networking opportunities and the one-on-one conversations. And how do you identify those people? And sometimes you don't know who's attending until right before the event when they actually finally release the list of attendees. And so I scour that, figure out companies I know about, companies that I have existing relationships maybe with their colleagues, any sort of easy introduction to a conversation. And then I find them. If I'm lucky enough, if the conference has good tech and they have photos of people, like for instance, this one had a mobile app that you could download, and you could sign in through LinkedIn, so it immediately connects it to your photo. So you can stalk people like any other social networking tool. I could find oh yeah, I know exactly who that is. I go right up to them hey, here I am. I know who you are.
So the funniest is because they kind of know who you are. You'll be talking to someone, and then all of a sudden you see someone peeking around the corner to get a glimpse of your face or your badge to see if it's really you.
Yeah, they're sizing you up from mid-belly,
yes,
your badges to your face.
Yeah, one of the frustrating parts of conferences like this is that, I don't know if you noticed, the badge hung down to your back. As people are walking around, what you see is eye contact, belly. Yep. Eye contact, belly.
And when they walk away, you know that you're not the person for them. You're like, oh, okay.
I'm not important enough. They don't want to talk to me. So conferences, what's next for you?
Next one for me, that's a good question. So there's a spring jam coming up in Boston, Insurtech. It's run by Ask Kodiak. So I'll be attending that one. I've already signed up.
Yeah, so what's funny for the listeners now, because nobody's here, but we're at an Ask Kodiak event, and there's nobody. We're the last ones here. Yeah, Alan like walked up. He's like, "Hey guys, I'm gonna split," and he like left, and it kind of like left us like, "Okay, what do we do now?" Okay, so the Insurtech Jam.
Yeah, I've attended their events in the past. They're very they grow. They're just not overly formal. Like it's loose. It's clean. It's simple. Like
it's after work, so you don't have to lose a day of work.
Yeah, and everyone's there for the right reasons. You're there. So you get to know people. Like it's not overly sponsored yet, and which I like. You know, it's kind of like you're finding out about a band or an artist before anyone else knows about it. You feel more emotionally connected to it and less responsible to attend because someone else told you to go. It's more like I want to go on behalf of myself.
Okay, 1992. I saw. I think it was Whitlock Hall, University of Massachusetts at Lowell.
Seriously.
And I remember just like, oh, Pearl Jam, I've heard them on the radio. This was like right before they absolutely exploded. So I like that as well. That's a really good analogy.
That's incredible, actually. Yeah, Pearl Jam's, I've yet to see them, and I have no excuse. I have to go.
Shame on you.
Thank you. I want that on record.
I was with Brett Poliquin. Thanks a lot.
Thank you very much.